Happy Friday, IHMC friends and family. It's Shayan from Integrity Home Mortgage, back with your weekly mortgage market commentary. This has been one of the most calm and orderly weeks for bond markets in recent memory. It's the dog days of summer and it's prime vacation season, but particularly over the past 3 years of interest rate madness that we've had, we haven't had many weeks this uneventful. So I'm going to do my best to try not to mess it up and talk a bunch today. The most important thing to note is that markets have successfully held on to the gains we got on the back of last Friday's weak jobs report. Mortgage prices are hovering close to their best levels of the year, which is a solid 50 to 70 basis points better in price from last Thursday, and that's great news. Next week is not likely to be quite as uneventful. There are several scheduled speaking events by members of the Fed, and we'll get some key inflation data. Fed speak is going to be scrutinized right now because of the expected shift in policy, but also because of the recent and upcoming changes in personnel. We got one governor out, we've got an interim governor nominated, and the president continues to narrow his choice for Chair Powell's replacement, presumably next year. Inflation, on the other hand, is perhaps just a little bit less of a headline right now than it normally is, owing to a couple of important factors. First, if we are indeed seeing the early signs of a dramatic slowdown in job markets, an argument could easily be made that the Fed should act quickly to shore up the economy and just be okay with inflation running at slightly elevated levels for the time being. Secondly, on a related note, this argument is really made all the more likely now that President Trump has nominated Stephen Barron, who's the current chair of the Council of Economic Advisors, to fill in, at least temporarily, for Governor Kugler after her abrupt resignation. So this nomination, combined with the two dissenting opinions from the last Fed meeting, has kind of raised expectations for a more dovish Fed moving forward. Dovish meaning that they are more inclined to cut rates than they are to remain on hold. So if inflation numbers like CPI and PPI, which we'll get this week, come in wildly off expectations, markets are no doubt going to react. But barring that, right, a wildly off expectation number coming in, investors are going to focus more on jobs and growth for the time being, neither of which we're going to get in a meaningful way until later this month. So that's all I've got for this week. Hope you guys have a great weekend, and we will talk to you next time.